Hey, how's it going, everybody? Jake coming at you from StratGeeks. We're going to be going over ORS Fusion trades and exactly why the system takes the trades that it does, and basically how to explain your trades if someone were to ask you why the strategy is taking the trades that it is. It is incumbent upon us all to know exactly why Fusion or ORS is taking the trade that it's taking, or why it takes a series of trades. It's important. It's incumbent. It's a requirement for Apex payouts. So you need to know, in case Apex asks you, why did you take those trades? You need to be able to tell them. You need to be able to show them. You need to be able to make a little video in case they request it, or what if they want to get on a Zoom call with you? They've been going a little bit nuts lately with all this stuff. Now, not to worry, because we are in alignment with all their rules. But if you don't understand how the strategy works, you haven't practiced, you haven't watched this video as many times as it takes to understand how to explain the strategy, then that's not ORS or Fusion's or StratGeeks' fault. That's your own. So I really want everybody to understand how this system operates. So I'm going to go through some trend trades and some range trades. ORS by itself, just the ORS program, only takes the trend trades. ORS Fusion takes ORS trades and Fusion trades, but we're just going to call them trend trades and range trades. So we're going to talk about ORS Fusion and why it does what it does. I'm going to have a sip of my coffee here, and we're going to take our time, and we're going to go through a bunch of trades. We're going to start with some trend trades, all right? So here we go. Trend trades. We're going to open up this chart, which is, this is another thing that you're going to want to make sure you tell them. You're going to need to show them, and by them, whenever I say them, I mean Apex. Or a friend, I don't know, somebody, yourself. You're going to need to tell them exactly why, like, why do we even have these grid lines? What the heck is all this? So I'm hoping that all of you already know the basics, but we're going to pretend that whoever's watching this video is watching, is learning about Fusion for the first time. So what's going to happen? Now we're going to just come over here and we're going to pretend. Let's actually give a little bit more margin here. Let's make it 500. All right, so we don't know what's happening. All right, so here's the opening. And this is what you might want to tell them. You know, like, hey, here we go. All right, so the open starts here at 9:30. Here's our market open. This is all Eastern Standard Time. So there's our opening candle, okay? And then we move along. We're on a NASDAQ 3-minute chart. We're looking for candle closes to eventually take our trades. All right, so market opens. We move along. So this is the first candle right here. So the market opens basically here. This is the first candle close of the start of this day's trading action. All right, so now we have a high and a low. So really all we're looking for simply is just the high and the low of the first 15 minutes of market action. So let's move along. There's another 3-minute bar, another 3-minute bar. Okay, so now we have a low put in here. We have a high put in here. Let's see if we can break that high or that low by the time 9:45 comes along. Doesn't look like it. So here's our low, here's our high. Then we have our opening range. From our high to our low, 3, 6, 9, 12, 15 minutes. All right? And this is measured in ticks from the high to the low, 157 ticks. Then what we're going to do for this template, the small opening range template. So all right, so we could say, all right, well, the first 15 minutes of trading action is complete. Our opening range is 157 ticks. That means we're going to be dividing our opening range into 4 sections. We're going to be using the small opening range template, and that template is from 100 minimum ticks to 225 maximum ticks. The other template, as we know, splits the larger opening range template, splits the opening range into 2 sections. So right here we split it into 4 sections. It's our small opening range template. 1, 2, 3, 4 sections evenly. So we can take our fib tool and manually draw from the bottom to the top, and that will extrapolate everything out. This is the standard deviation tool that everybody should have. If not, you don't really need it in real time. The strategy will be plotting these lines. In backtest, we want to use this tool to extrapolate our lines forward. So now, if they're asking like, well, how do you set your targets and how you set your stops? Well, for this template, our target is 100 and let's check it. It's 135%, I believe. So we'll just scroll down to where our targets are. Profit target percentage of SD is 145%, and our stop loss is 2 standard deviations. That looks like this. So if our trade was entered here on this line, our target would be 145% of 1 standard deviation. There's 100%. There's 150% or so right there. So our target would be right about there. And our stop loss was what? 2 standard deviations. So 1, 2. So our stop loss is going to be here. Our target's going to be here. And our entry was right here, right? So 145% is our target. Our stop is 2 standard deviations. Let me just adjust the drawing tool here to make this a little bit more accurate. We're going to turn off snap mode. So that's how I would say, like, look, all right, so that means our targets today are going to be somewhere in the ballpark of 54 ticks. Our standard deviation today is 42 ticks. So our stop loss is going to be placed about 2 standard deviations. Well, it's going to be placed 2 standard deviations away, and that's going to be 80 ticks. So our stop loss is 80 ticks, and our target is, I don't know, about 54 ticks. So if you wanted to do the math on that, you would just take 145% of what 1 standard deviation. So 1 standard deviation here is 40 ticks. So it'd be something like 145, be somewhere right around in there. So hope that makes sense. I don't know how much more clear I can really be on that. So that's how we figure out our stops and our targets for the complete day, for the whole day. Okay? All right, drink a sip of my coffee now. All right, so moving along. We're not allowed to trade until 11 o'clock with both of these templates for Fusion. So moving along, hanging out, doing nothing. Here comes 11 o'clock. This drawing tool thing out of here. Here comes 11 o'clock, 10:45. There's 11 o'clock. So we'll see on the next bar, our red shaded area dissipates, and we are in the clear to start trading. Now, what do we need for a long trade? We need 3 things. We need a buy zone, close above the EMA, and the EMA to be white. So it's a little hard to see behind this red shaded "you're not allowed to trade" area here. I could get this a little bit more accurate. See that? Just for us. There we go. So we can see down here on our ADX, and I'll explain what this means later. We got a buy zone, sell zone, buy zone, sell zone. Now, these buy zones and sell zones are plotted by our secret sauce ORS indicator, and you just got to be ready for these things to change on the fly. There's you just gotta just get used to looking at the chart. You know, like obviously we're going up here, we're in a buy zone, then we get a big down candle here, and there's some more downwards action here, and then we turn into a sell zone, and we're still in a sell zone at the close of this candle. The next candle we switch to a buy zone. So now we have all the requirements that we need to go long. We have candles closing above the moving average. Our moving average is white. which means it's sloping up. So 1, 2. And our third thing is our buy zone. We're in a green shaded zone now. This whole area is green shaded zone. So once those three things happen, we are going to place a limit order one line back. Here's the close of this candle right here. Now we're going to place a limit order one line back on this standard deviation. All of the entries are based off of the standard deviation lines. When I started this section of the video, I told everybody that we're going to be doing just trend trades. So trend trades for Fusion, we're going to look down here. This is our ADX indicator. This indicator basically tells us in a quantifiable fashion, in an algorithmic fashion, if we're ranging or trending. So for this particular template, we will be taking trend trades, which are pullback limit order trades, just like this one, as long as our ADX is above 15. So we can come in here and go to strategies, and we can look at our ADX value is 15. If we're over 15, we're going to take limit order pullbacks. So here's an example of one. This whole day is all limit order pullbacks because we're trending the whole day. Okay, so down here, anywhere down here, we're ranging, and we never range this whole day. We can see our ADX line up here, staying above, staying above, staying above, staying above, staying above. Okay, so we have our three things. Just to reiterate yet again, our white moving average is sloping up. We're closing above the moving average. Quite clearly, all of these candles are closing above the moving average. We then have a buy zone. So somewhere between the close of this candle and the close of this candle, our sell zone, which was here, turns into a buy zone. So we're going to go over a bunch of trades. I want everybody to really understand this. Watch this video a million times, however many times you got to watch it. All right? Okay. Can't express how important it is that everybody knows how this thing operates. Okay, so we got our three things. Our candle closes here. So we got a little bit of a pullback. Here's our order. Order waiting. Okay. And the price moves along. Oh, well, geez, what happened? We didn't get filled. We're looking for a fill down here. We did not get filled. What happens if we don't get filled on this line? Well, then this candle, the next candle closes above the next standard deviation. So we're going to move our order up to the next. We're going to chase it just a little bit. We're going to chase it up. So as soon as this candle closes here, we're going to move our order up, or the strategy will move its order up. And we're going to look for a pullback to this line. Now order was going to be waiting here. Let's see if our order gets hit. Bam, it totally got hit. All right. So order is no longer waiting. And where is our target? Our target is 145% from where our end of a standard deviation. So that is right here to be exact, as 145%. Here's 100%. Here's 145%. I don't think I had that accurate. Oh, excuse me, something like 56 ticks. So there's our first trade of the day. Enter long, exit. That's it. All right. So let's go over a couple more. I don't care. I honestly don't care if this video is an hour long. I want everybody to get this. And I'll reiterate things however many times I feel is necessary. You can always fast forward. Okay. All right. So moving along. So we're allowed to actually have 2 trades per buy window. This is a buy window, this whole green shaded section. If we would have had another opportunity before we turn it into a sell zone, then we would have taken it. This particular template does allow 2 trades per window. And we can find that right. Scroll down a little bit. Right here. Max trades per window, 2. And per window, we mean buy zone or sell zone. So we can see here, though, on the next candle, we turn into a sell zone. So our sell zone and our buy zones are very sensitive. We have an underlying algorithm working really hard and really fast to almost make this not quite that much of a lagging indicator behind here. Because one could look at this chart and go, how does that turn into a sell zone? We're still going up. Well, secret sauce. You just got to be ready. Got to be ready. So for one second here, for one 3-minute bar, somewhere between here and here, we do turn to a sell zone. So we're not going to be taking any longs or shorts. We can only go long above the moving average when the ADX is above 15 on this template, the small opening range template from 100 to 225 ticks. This is 157 ticks this day. Okay. And trading live, it will tell you automatically how big or small your opening range is right down here where it says OR. This is for the last trading day. So in backtest, this is not relevant. But it will tell you whether or not you're going to trade this chart or the other chart based on if this little light down here basically is green or red. The last trading day, we were a small opening range, so this was green, and we traded the small opening range template, which is the one that we're working with right now. All right, so moving along, this next candle does indeed turn us back into a buy zone. So what do you think we're going to do here? We got all 3 criteria. We got candles definitely closing above the moving average. Our moving average is clearly white, and we're in a buy zone. So this sell candle, this bearish candle, closes right here. That means that our limit order is going to be placed 1 standard deviation below it because we're going for longs. We need our price to pull back after the close of this candle. We need our price to pull back and hit our limit order. Limit order waiting. It's not going to wait long here, most likely. Let's see. Does it get filled on the next candle? Yes, it does. It gets filled on the next candle and goes right to target. And what's the target? 145% of a standard deviation. Where was our stop? 2 standard deviations away. You can also think of it as 200% away. Our stop would have been here. Watch. 1, 2 standard deviations away. Our stop gets placed here. I'll even turn this red and make it even more clear. Let's do this. All right, I'm starting to get into the video now. All right. Red. Okay, just be a little slow. So our stop is here, and our target was here. Let's make this green. Make it lime. Okay. All right, so just to reiterate, here we go. We are at sell window, then we turned into a buy window again. We had our 3 criteria. We had a white EMA, which is sloping up. We have our candles closing above the EMA, substantially above, and then we turn it into a buy zone, this green shaded zone back here. Then we place a limit order. The strategy will, or we can by manually placing it there, however you want to do it. But of course, it's much better just to have the strategy do what the strategy does. With Apex, maybe you want to tell them you do all this manually. I don't know. Or with the strategy. It's fine either way. So our limit order gets filled on the next candle, and we immediately go to target. Our stop is 2 standard deviations away. Okay, so let's see what happens on the next trade. Okay, great. We have a loss. All right. And why do we have that loss? Let's see. Let's get rid of this. Move this over here. Okay, so we're allowed to have 2 trades per window. So we're going to be this order filled real quick and got the target real quick, under 3 minutes. So we're still going to be looking for another trade in this window. And on the back test, this looks a little funky because we actually got filled over here. You know what? I'm just going to skip this because it's not really helpful as far as instructing goes. Well, I mean, I guess it could be. So, yeah, I guess it is. All right, so this trade completes. Now we're going to have an order waiting here because we're still in the buy window. We're going to look for a pullback to the limit order, waiting here. Our target's going to be up here, 145%. Our stop is going to be 2 standard deviations down, 1, 2. And what happens? We get filled, and immediately drops and stops us out. To the tick, by the way. Oh, I remember this trade. We have a new update coming out that's going to give us a 5 tick, or however many tick offset. Oh, that's crazy. That's like literally by 1 tick. Just goes to show the power of these standard deviations, and yeah, so we might have an offset coming. All right, so that is a loss. We can see 1, 2 standard deviations lost, and it did not come up to target. It got to the first standard deviation, and then we're also going to have an update coming out real soon where we can tell the strategy to move our stop to break even at a % profit of a standard deviation. So we could say move stop to break even at 100% profit of 1 standard deviation, and our stop would have been moved to break even here. And then we'll also have another update where we could have a 5 tick offset. So here we can see we are in a sell zone, and we're not going to be taking any longs here because we don't have one of the 3 criteria met. Okay, so moving along, still in a sell zone. That's a heavy sell zone. This bar really dropped us down there. Now we come back and we're in a buy zone again. And we got our 3 criteria meet. Our ADX is still above 15. Only taking trend trades. These pullback limit orders. And just reiterate one more time again. I'm going to keep coming back to this like a pullback, like a callback. Comedians do it. A callback to our opening range. Remember, our first 15 minutes of market action defined all of these lines all the way up and all the way down. Our opening range was 157 ticks, give or take. We split with this particular template, the small opening range template. We split the opening range into 4 sections. 1, 2, 3, 4, and each section is about 39, 40 ticks or so. That's going to determine our stops and our targets. Stops with this template are 2 standard deviations. Targets are 145% of a standard deviation, so not quite 2. All right, so we come and we close below this standard deviation line. Here's the close of this bearish candle here. So where do you think we're going to have our limit order placed? We have all 3 criteria. We got a white EMA, we got closing above the EMA, and we're in a buy window. So our limit order is going to be placed right here on this standard deviation. It's always 1 standard deviation line for longs. It's always 1 standard deviation line below where the candle closes. Candle closed here, so that means we're looking for a pullback here. If the candle would have closed up here in this window, then we would have been looking for a pullback to this line, but the candle closed there. So let's see if we get filled. Limit order is waiting. Our target would be placed up here if this thing gets filled, and our stop's going to be 2 deviations back. And we do indeed get filled perfectly. Our stop is placed here. Our target is placed here, 145%. And we can see, because we do have the strategy backtest running, we can see that we do indeed hit our target of 145%. Bam. Okay. So that's cool. I think that was pretty good. That's 20 minutes just on trend trades. And so let's just overview real quick, and then we're going to move on to the range trades. So what did we do? We had first 15 minutes of the open. Our opening range is formed, 157 ticks total. We split that with this template, small opening range template, into 4 sections, 1, 2, 3, 4. Each section, or otherwise known as standard deviation, is 40 ticks or so. That determines our stop and our target. Target is 145%, and our stop is 2 standard deviations. Here's the high of the opening range this day. Here's the low of the opening range this day. As you can see, our ADX is above our required 15 to only take trend trades. Now, I know I repeated myself a lot, but that's intentional, so I hope everybody understands Fusion trend trades. Now, if you're trading gold with ORS or something, these are the only types of trades that ORS takes. Okay, so I don't need to make a separate video for ORS. These are ORS trades. Fusion as well. Fusion's also going to take this other type of trade. Okay, here we go. Now we're going to talk just about Fusion trades. And we will also call these range trades. And there's one really good example right here on this chart. They are not as common. Okay, so what do we notice here? What's the difference? Main difference. Here's our opening range. Okay, let's pretend we don't know anything that's happening yet. Let's make this a little bit bigger. Here's the start of the day. 9:30 a.m. Eastern Standard Time. Okay. So our first candle close of the day is right here. Here is our low. Here is our high. So now we're going to see in the next few bars, if we can break that high and break that low, then we'll put in a new high or a new low. Next candle closes, we put in a new high. Next candle closes, we put in another new high. So what's our standard? Our opening range right now is 253 ticks. And we come up on 42. And then here's our 45 candle. So we have our opening range has been formed. So here's our high. Here's our low. So here's the full opening range. Okay. Market opens, puts in its high, puts in its low here, right off the bat. And that gives us a total span of our opening range of 252 ticks or so. What does that mean? Well, that means we're going to use the large opening range template. So here, our small opening range template, these kinds of days, they operate differently. It's a different beast. So our small opening range template, we can see splits it into 4 standard deviations. 1, 2, 3, 4. Because look, we're only 157 ticks. If we're over 225 ticks, very specific. So over here on the other chart, 226 ticks or above, all the way up to 600 ticks, we're going to use the large opening range template, and the strategy will be where our stops and targets are actually going to be placed differently. We're going to break our opening range up into just 2 standard deviations. See this? 1, 2. It's a little counterintuitive, but it works. So small opening range template, 1, 2, 3, 4. Large opening range template, and that means 225 ticks or above, splits it into 2 sections. So let's see what our standard deviation for this day is. Well, it's going to be half of 252. So we can just measure our target, our standard deviation rather. It's 123 ticks. If this template trades, let's go ahead and see what our targets and our stops will be. We'll scroll down to exit settings. Our stop loss is going to be 2 standard deviations, and our profit target is going to be 125%. So an inverted risk reward, that's fine though, because our win rate is something like 75% or something great. So we're going to be risking 2 standard deviations to make 125% of 1 standard deviation. So a little bit more inverted than the other template, but still looking good. And this template only trades for a little while. It's very, very particular. It still starts trading at 11 o'clock. We can just scroll to the filter settings. We start trading at 11 o'clock and we stop trading at 12 o'clock. If there are any open trades after 12 o'clock, they will continue to be open until they either hit the stop or hit the target, or we hit, or the time goes till 12:45 p.m. Eastern Standard Time, and then we will exit the trade. All right. So let's talk about the range trades. Okay. So also for this template, our ADX, we're not looking at 15 now. For this template, we need a 25. So I have this blue line right here snapped at 25. Okay, so if the ADX on this template, the large opening range template, if the ADX is over 25, then we will be trading trend trades only, just like what I showed you a second ago on the small opening range template. The large opening range template is 25. The small opening range template, this one, our ADX has to be below 15 or above 15. If it's above 15, we take trend trades. If it's below 15, we take range trades. I'm going to explain exactly what I mean by range trades here in a second. For this template, the large opening range template, if we are above 25 ADX, over 25 equals trend trades. And if we're ADX below 25 equals range trades. So we can see here we're getting close. We're getting close to taking range trades. So moving along, don't really care what's going on because we're not trading until 11 o'clock. Here we go. You can see the buy and sell zones underneath the red shaded area. This red shaded area obviously means we're not allowed to trade in that time period. Moving along, where's 11 o'clock? Here it comes. And we start out 11 o'clock. We can see we're in a sell zone here. Start out 11 o'clock, and we switch right to a buy zone right at 11 o'clock. But here's the crazy part. Here's where Fusion comes into play. So do we have all three criteria met? Well, yes, we do. We have A, or number one, a white EMA. Number two, we're closing above the EMA. I got to switch this. Hold on a second. Let me get rid of snap mode here. All right. All right. I told everybody I was going to take my time, and that's what I'm going to do. Okay. I have to sip my coffee. Because get ready. This is going to be a little confusing of what's going on here, these range trades. But I don't know. Has anybody ever gotten into? I mean, you're sure you have gotten into trades and immediately it just the price just reverses and then it keeps happening. Well, that's what happens in range. There's two distinct types of markets. Obviously, as we all know, there are trending markets and there are ranging markets. So the beauty of Fusion is that we literally have a different strategy. Well, I guess not literally a strategy. Way. We literally have a different way, because it's all one strategy. We literally have a different way to trade trending markets versus ranging markets. And we have a way to quantify what a trending market is versus what a ranging market is. How do we do that? Trending market is, on this template, a trending market is over 25 period ADX. A ranging market is under 25 ADX. Okay, so moving on. All right, so our ADX is absolutely in range. Here it is. Our ADX is in range. It was in trend, and then right here it switches and it's in range. I'm actually going to color this because that line's very thin. I take my time. I want everybody to understand how this strategy works perfectly. Okay, so we can see our ADX here at this point is like 17.77 or something. But here's the crazy part. Without Fusion and without the ADX, we would be looking for what? We'd be looking for a pullback to this line, right? We're still actually looking for a pullback to this line. So we have our three criteria met for entering a long position with a say we didn't have the ADX on here, or say we are trending. We have all criteria met to take a long, right? So we have a white EMA sloping up. We have a candle closing above the EMA, and we're in a buy zone. But we're not going to take a long. We're going to take a short because our ADX is below 25. We're going to do the opposite. So we're actually going to place, let me just make sure I have this right here. Yeah, it doesn't take it here because, yeah, hold on a second. Oh, this is actually really, really good. I'm glad that this happened right here. Okay. So this is really important and kind of tricky. This is a cool thing about Fusion and ORS. You'll notice that the EMA, this is a little finer point detail, but it does happen every once in a while. Our EMA is here, right? But our standard deviation line is below it. To take a trade, we need our standard deviation line. To take a long here, we would need our standard deviation line to be above the EMA. So we're not going to take any trades because what Fusion's looking for is our EMA to be above, or our standard deviation line to be above our EMA. Okay, and in this case, it is not. Not until we get here. Okay, so we're in a buy zone. Then we switch to our EMA switches colors. So we never actually get the whole entry criteria because our EMA happens to be above. This is going to happen more with this template than the other templates, because the standard deviations are so much wider here. I mean, look at our standard deviation here is 125 ticks. So we're going to have longer trades with this template. They're gonna be longer in duration. So again, our standard deviation line would have to be above our EMA in order to take a long in this case. Although it would be a short in this case. It's a little confusing because we're in range. I know it's a little confusing, but here it'll become more clear here in a second. All right, so our EMA switches turns to blue. And we are closing below, turns to blue, we're closing below, and now we get a sell window that starts here. Okay, so we have all criteria met to take a trade. So the trades that we're going to be taking when the ADX is below 25 are range trades. So they're going to be opposite of what we would take if they were trend trades. So we're going to be looking for a pullback, just like we were if this was a trend trade. We're looking for a pullback here to this standard deviation line. This candle closes right here, obviously. Now we're going to look for a pullback to the standard deviation for a short. Obviously, this is inverted if we're going long. We're going to look for a pullback to the standard deviation. But instead of placing a sell limit here, we're actually going to take a long here. We're going to take a buy. We're going to place a buy stop. Buy stop. Order waiting. Not a limit order. If we were, this is very important and somewhat difficult to explain, as you can see. If our ADX was up here above 25, there would be a limit order waiting here, and the price would come back, and then we would, well, in this case, we don't hit, but then we would be looking for a target of 125% down here. Okay, so this is actually a really cool little area. So we have a buy. So what we do here is we have a buy stop order waiting. Our ADX is below, so we're going to be placing buy stops, not limit orders. Now the next candle closes and we don't pull back. So what do? Same thing as what we're going to do with trend trades. We're going to follow the price down. And now this candle closes here. Zoom in a little bit. And we're going to have a buy stop order waiting right here. And we're going to look for a pullback to this standard deviation line. Because our ADX is low, we're not going to be looking for a short to 125%. we're going to be looking for long. So we're going to take the opposite trade that we would if it was trending. So the price does indeed come back. It hits our order and then continues to go up and eventually does indeed come to our target at 125%. So as you can see that this is broken up. This is 25%. So we could literally do it like this. There's 50%. There's 75. And there's 100. So a full plus 25. Hopefully that makes sense. And where would our stop be? Our stop's still going to be 2 standard deviations down. 1, 2. Target 1.25. 125%. All right, let's go over this again, because this really is a perfect little spot. And I think we're going to be good to go. All right, so let's just stop and refresh for a second, then we're going to go over this trade one more time. All right? Okay. Okay. All right, so at the beginning of the day, we waited for the first 15 minutes of price action to determine what our opening range for this day is going to be. We determined that it's 252 ticks. That means that we split our opening range into 2 sections, not 4. We're going to use the large opening range template. It's 251 ticks. Then we figure out what our standard deviation is. Our standard deviation, splitting the opening range into 2 sections, not 4. 2 sections on this template is 124 ticks, give or take. We found our high and our low. We got 124 tick standard deviation. Then we're not allowed. Then we're going to split. We're going to extrapolate our standard deviations up and down. And we're not going to start trading till 11 o'clock. Here we don't get a valid entry because our standard deviation line is not, we're in a green zone. We have all of our criteria met to take longs, but our standard deviation line is not above our moving average. It is here, but we don't get filled. It is here, right? Oh no, it's still not. It's still below. We still need our standard deviation line up above. That never happens. And then our EMA turns blue, so we never get all the criteria met here. Then we come along and we have all of our criteria met for this short. Blue EMA means it's sloping down. We're closing below the EMA, and we have a sell zone. So 1, 2, 3. Now we're going to have a buy order waiting. Immediately, the strategy is going to place a buy stop here. Why? Why is it going to be a long? A long underneath the moving average? That's insane. Well, no, it's not, because our ADX is super low. Always be watching for where our ADX is. On this template, our ADX is below 25, which means we're going to be taking range trades. So we're going to be placing the opposite order that we normally would if our ADX was above 25. Remember, the other template is a 15. This template, the large opening range, is a 25. So we are clearly below 25 here, way below 14.9. So instead of looking for a pullback here and a short entry for 125% here, we're actually going to be looking for a pullback here and then 125% target way up there. But that doesn't happen until the next bar. So this bar closes here. So what are we going to do? We got to chase the standard deviation line. So the order is going to chase down. So this candle closes here, right here, which means that our buy stop, remember it's a buy stop, not a sell limit, because our ADX is still below. Our buy stop is placed 1 standard deviation line above where that candle closes. Now our price is going to hopefully pull back into our buy stop. A buy stop just means that we want our price to hit our order and then continue on the way up. We're buying. So the next candle hits our buy stop order, and obviously just invert all of this for if the market's doing the opposite. I'm not going to go through longs and shorts. I think we can all figure that out. So candle closes here. Our order gets placed. It's waiting here for a buy stop. We're waiting to take a long because our ADX is below 25. I know I'm on repeat. That's okay. Order gets filled, and we're in a long. We're in a long on purpose below the EMA. Because ADX says we're ranging. This looks like a range to me, right? I mean, that looks rangy. Bang, 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 bang. Very rangy. Okay, so our order gets placed, and we get filled. Our stop, again, our stop is down here. Take the time to do this. Our target is going to be up here at 100. So here's 100%, 125%, probably right about there, right? Stop. Target. Okay. Target 125%. Moving along. And here we are not allowed to take any more trades because we turned, it's 12 o'clock. It's only an hour window. And our target gets hit right here. 125%. Stop. 1. 2 standard deviations down, target 1, 125%. Now, if this trade did not hit target by 12:45, then the trade would automatically close. So in this case, it would close like right around break even with a small loss or something. I hope that makes sense to everybody. I don't really know if I can explain it much better. I might be able to explain it more succinctly, but I think it was important that I reiterated stuff in, I don't know, it was multiple different ways. This has been quite the video as far as length goes, but I think it's all worth it. Again, if you don't understand some aspect of what I just went over, just rewatch the video, because I don't know if I'm going to be able to explain it any better. Just to reiterate one more time, for the large opening range template, we were over 225 ticks. Strategies, let's look at it. So with this particular template, our minimum is 226. Our maximum range ticks is 600. If we're over 600 ticks, then neither template's going to trade. So we're over 220, we're 226 ticks or over. We can see that right here, 251, which means we are going to be trading the large opening range template. Our ADX value here is 25, so that means if we are over 25, we're going to be taking pullback limit order trades. If we're under 25, then we're going to be taking buy stop or sell stop trades. So the price comes to it, goes through it, and then goes to target. Not really a pullback to a target. It's just it's a buy stop or sell stop. And with this template also 2 trades per window. That's cool. So both templates will allow 2 trades per window. Again, just to reiterate, a window is any green zone or red zone. So we got our opening range here. We know that it's a big opening range. That means we split our opening range into 2 sections, not into 4. And then we have our targets as 125%. And our stops as 2 standard deviations. And in this case, just one more time, I'll try to go over this trade one more time without dealing with this part. So we come and we are below the moving average. Our moving average is blue, and we are in a red shaded zone. We come down, we look at our ADX, and it is indeed under 25. So we will be looking for a pullback to, does not pull back here. Does pull back here. So we're going to be looking for a pullback to this standard deviation line. As soon as this candle right here closes, we're looking for a pullback to this standard deviation line. We have a buy stop placed. Our order gets filled for a buy. Our ADX is still low, so instead of taking a sell, we're going to take a buy, and we're going to go all the way to target, however many bars later that is, and we'll be done with that day. Our stop down here is 2 standard deviations away. Our target is 125%. All right, everybody. Well, there's another hour video for you guys. I hope you enjoy. And yeah, again, here's the 2 templates side by side. Small opening range template. Over here on the left, we are under 225 ticks. That's 157 ticks on this particular day. There's a high and a low. This one splits it up into 4 sections. If we are over here on the right, we are a 251 tick opening range, which means we're going to split the opening. That means we're over 225. It's 251 this day. So that means we're going to split the opening range into 2 sections. Small opening range, 4 sections. Large opening range, 2 sections. ADX over here for this template is 25 threshold. There you go. There's the word I was looking for. ADX over here for the small opening range template is 15 threshold. Over 15, we're going to be taking trend trades only, which is this whole day. There's the whole day, and this template trades till 2 o'clock. See, we had a bunch of wins. We had 1, 2, 3 losses, and 1, 2, 3, 4, 5, 6, 7 wins, 3 losses. So that was definitely a profitable day. This template again starts at 11, ends at 2. ADX threshold is 15. Over here on the right is our large opening range template. We can see it's on the smaller side, but it still fits within the parameters of our large opening range template, which starts at 226 ticks. This is 251. Because of that, we're going to split our opening range into 2 sections. Our standard deviation on this day is then 123, 124, something like that. That's going to determine our stops and our targets. And as you can see here, we enter just 1 trade. This template does trade less and goes to target here pretty perfectly. Man, that's kind of crazy. Yeah, look at that. Within like a couple ticks. Nice. So there we have it, folks. Jake from StratGeeks, ORS Fusion, signing out.